All right. So on this session, we are going to learn about what is Forex. A Forex simply means foreign exchange, right? Simply means foreign exchange. That means exchange of different currencies. Now, there are so many different countries around the globe. They are having their own different currency. For example, we have Indian rupees, US has US dollars, Canada has Canadian dollars, Japanese has Japanese yen, and so on. Right? So now exchanging of these currency depending on their rates is called foreign exchange. Now, how exactly it works? For example, as we are in India right now, and if you want to go to different country, let's suppose US, and if we travel to US, we cannot use Indian currency over there. What we have to use is US dollars. So now in order to get US dollars, we have to exchange the currencies manually, right? Physically, we have to exchange the currency at the airport or any foreign exchange office. So now let's suppose we are going to USA that has USD, and the rate of USD is, let's suppose, 75 rupees. Okay, one USD is 75 rupees. Now, if you want to buy $100, right? If you want to buy $100, that means we have to give 7,500. Okay, so you are going to exchange your 7,500 rupees, and in return you will be getting $100. Now, think in a way that because of some or the other reason, you are not using that $100 when you are in USA, right? By some or the other reason. Now, when you come back, okay, when you come back to India, and again you have to change the currency, right? Again, you have to change the currency. Now, as you change the currency, and if the dollar rate is 76, right? If the dollar rate is 76, now you will be getting 7,600 rupees back. That means you are making profit of 100 rupees. Right? This is a manual exchange. Right? This is very basic. But if the value of dollar is going down by 1 rupee, that means you are losing 100 rupees. Right? Simple as that. Now, when we talk about Forex trading, we don't have to manually exchange. We don't have to manually buy certain currencies as an asset like we do in crypto or any other markets. What we do is simply trade on the manipulation, okay, or you can say the fluctuation of the rates, right? We trade on the fluctuation of the rates. For example, if US dollar is getting stronger against any currency and we see the market is going up, we will buy. And as the market keeps on going higher, we make profit. And if the market is going lower, we would sell. And as the market keeps going down, we would be making profits, right? So that's all about what is Forex. It's foreign exchange. We deal in different currencies and we trade the movements in the market, right? So now the second thing that we will learn over here is market participants. Now, who all trade in foreign exchange market? Who all trade in foreign exchange market, and what are the participants who all can participate in foreign exchange market? Now, there are total 5 types of market participants that we have in foreign exchange market. The first ones are commercial banks, right? These are commercial banks. Now, these commercial banks, are small number of groups. We can say a small number of banks sitting at the top, right? Commercial banks are the small number of banks sitting at the top and controlling the whole market. We can also call them as market makers, right? So they have huge participation, okay, in this foreign exchange market. There are a small number of banks sitting at the top. They're controlling the whole world's money, okay? That's why we call them as the market makers. These are the first participant. Now the second participant are central banks. Now, what are central banks? Now, central banks are the banks who have the reservoirs of their own native currency. Right? They have the reservoir of their own native currency. For example, central banks in India will be having the large reservoirs of Indian rupees. In USA, these banks will be having large number of reservoirs of US dollars. Now, along with these banks having the reservoirs, these also can control economic policies, or you can say economic events, right? Such as monetary policies, interest rates, and so on, right? So simple. Central banks are the banks who has the large reservoirs of their own native currency, okay, and they also control economic events, or you can say economic factors, such as monetary policies, interest rates, and so on. Now, the third type of participants are MNCs, right? MNCs. Those are multinational companies. Now, companies like Coca-Cola, right? Companies like Samsung, right? All these are MNCs, and there are so many other companies as well. Now, how these companies participate in the foreign exchange market is by doing international businesses. For example, let's suppose if any Indian company, okay, which is a multinational company, is producing any goods and selling to any other country, for example, Japan, right? If Indians are making goods and selling to Japan, that means they are doing the international transactions, right? They are participating into foreign exchange market. And by doing this business, India may get huge profits. That means the economy of India is rising. As it rises, the value of Indian rupees also goes higher. Now, as the value goes higher, definitely the market moves, right? There is a movement in the market. There is a fluctuation into the rates, right? This is how all these MNCs participate into the foreign exchange markets. Now, the fourth one are the fund managers, right? Fund managers like hedge funds, okay, or you can say brokers, right? These are the fund managers. Now, these fund managers, okay, they also manipulate the market, right? They manipulate the rates, they manipulate the spreads, right? Spreads, that means the commissions, right? For example, let's talk about any of the broker. If any of the broker, okay, which is a fund manager, they don't want people to win. They don't want people to make money, because if they make money, they are not making so much money. But if the people are losing money, that's where they are making money. That's why they manipulate rates for the people to lose, and they also increase the spreads, the commissions, while we are in the trades. So now these fund managers, hedge funds, brokers, okay, they trade against the last and the final participants. Those are the retail traders. Now, what are retail traders? Retail traders, that means us, right? We are the retail traders. Like any individual who independently trades or participates in the Forex market is a retail trader, right? That means there is no middleman. Okay, they are directly participating into the foreign exchange market, and these fund managers mostly trade against these retail traders, or you can say they manipulate rates and spread so that retail traders loses their money. And how exactly these retail traders lose massive money is because of lack of knowledge, right? Because they do not understand the market, they don't have the right information while they step into this market, because they have that instant gratification mindset, right? And when they have that thing and they are not well aware of the market and what could happen, this fund manager takes the advantage of that, right? And most of the retail traders lose their money. But that doesn't mean that all the retail traders lose money. As we hold or handle the small proportion of market, yet we can make significant greater profits. There are people who are making huge amount of profits from this forex market. Why? Because they are educating themselves, they are understanding about the market, right? And hence they are making money. Now, how can we exactly learn? What exactly we need to learn into this foreign exchange market? So we need to learn to analyze the market. Now, there are majorly three types of analysis that we need to learn into foreign exchange market. Now, what are those three? First one is technical analysis, right? The second one is fundamental analysis. And the third one is sentimental analysis, right? So what is technical analysis? Technical analysis, that means study of the market structure, right? Study of the market structure, study of these, how the support and resistance work, the trend lines, and etc, 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 right? For example, I will just open a chart. For example, this was a technical analysis that I was doing. I was studying the market. I was looking at the specific support resistance level, how the market would play, right? And on that basis, I would enter my trade. I would just look wherever I'm getting a good support, good resistance, the trend line breakout, the retest, all the information that this market is giving me on the charts. Now then we have fundamental analysis. Fundamental analysis, that means study of the news events happening globally. Now there is a website called Forex Factory. Now, this Forex Factory gives us what kind of news, what kind of economic events is happening globally, and what currency pair will be affected by that. Now, there are different kind of folders over here, different color folders over here, and these all are the news. Now, the color of these folders has meaning. There are majorly four type of colors you will find in this folder. One is yellow, one is orange, red, and gray. So now when you have a yellow folder on a particular currency, that means there is a news, but it won't be affecting that market so much, right? It won't be affecting the market so much. The impact on the market is not greater, right? It's normal. Then we have orange folder. Orange folder, that means the impact on the market on that particular currency because of that news or economic event is a little bit higher. That means we have to be careful when we are entering a trade, when we are analyzing the trades. We have to manage our risk and everything, because major movement can happen in the market and unexpected movement can happen in the market. The uncertainty in the market is very much high. Then we have the red folder. Now, red folder, that means the market will be impacted very heavily, right? More than the orange folder. I personally stay out of the market whenever I see any news events happening. But there are also traders who understand how these news events work, and they also trade along with that. They catch all those major moves. Now let's see in the market. For example, these kind of move can happen because of the red folders or the orange folders, right? Market can move massively in one direction or the other, okay? And we won't be understanding what's happening exactly. For example, right over here as well, market suddenly dropped heavily from this price onwards. That could be the effect of the news, right? Even here, the market dropped massively, right over here, right? So we can also study these market on the basis of fundamental, on the basis of the news events happening, and we can also trade on the basis of that. Now, the third type of analysis, this is interesting, and I personally love this kind of analysis. Sentimental analysis, that means understanding the emotions in the market, right? Understanding the emotions in the market, understanding how the market is feeling. Right now, how can we understand, how can we know what market is feeling? So now sentiment analysis is majorly the study of the candles, candle wicks, the length of the candle, and so on. How many candles we have in a particular consolidation or particular structure, all that tells us what the market wants to do now. For example, if I see that the market is pushing down heavily from this particular point, I have this huge white candle. Okay, in general term, it will be a red candle. That means I know that from this particular price onwards, market pushed once and twice. That means market wants to push down from this point. Why? Because there are heavy sellers in the market coming, right? And you can see from that price onwards, the market pushed a little bit down. And right over here, I can see that from this specific price onwards, or in this specific price, I see the market is rejecting heavily on the upside, and we have some wicks on the downside. Same over here, we have the wicks on the downside, and the market is heavily rejecting this area. That means it is telling us that market wants to go higher. There can be heavy or more number of buyers in the market, right? You can study the sentiments of the market, and you can understand or you can predict the direction of the market where it wants to go. Also, some traders like to count the candles, right? They like to count the candles in a particular consolidation. That in a particular consolidation, if there are more number of green candles or bullish candles, they would say that, okay, market wants to go higher because there are so many buyers in the market appearing, trying to push the market higher. If there are more number of red candles, it will be completely opposite. That there are more number of sellers appearing in the market and they want to push the market down, right? So that's all about the three types of analysis, right? So a quick recap, what is Forex? Forex is a foreign exchange, okay? And we deal in different currencies across the globe, right? And we trade the market movements. We don't buy a specific asset, just like we do in crypto, just like we do in stocks. We trade the movements basically. Then we have the market participants. There are majorly 5 types of market participants: commercial banks, those are at the top. Then we have central banks who have the large reservoirs and control economic factors. Then we have multinational companies who trade internationally that affects the foreign exchange market. Then we have hedge funds who manipulate rates and spread and trade against the retail traders. That's us, right? Any individual who can participate in the foreign exchange market without anyone, individually and independently. Then we have 3 types of market analysis. One is technical, that is study of the market structure. Second is the fundamental, that is study of the news events happening globally. Then we have the sentiment analysis, that is understanding the emotions in the market, right? So that's it about the session. We'll be seeing you on another session.